Boom. Boom. Happy Sunday, traders. Well, at least it's still Sunday for me. Late on a Sunday for me, but happy Sunday. Happy Monday for some of you. Happy evening. Happy morning. Good morning, I should say. Well, depending upon where you are in the world, guys. Welcome. Another live session with Oliver Velez, of course. Hi, my name is Oliver Velez. And once again, we're going to talk about our favorite topic today, Bitcoin. You didn't think I was going to let the weekend go by without touching base with you, right? I've only got a small, limited period of time to do this before blast off. So I just want to get a few more opportunities in to pound the table on you going to work and stacking harder. Our time is limited. You know, that is one of my central themes. That is what I've been pounding the table on most of this year after the halving, that historically we tend to have this lull in Bitcoin during its halving year, right after the halving into that period right before presidential election time, if history's any guide, and then it's blast off. This has happened virtually every single quarter, and in many cases, every single year. The latter part of the year is Bitcoin's period cyclically to shine. I believe that we're on the verge of Bitcoin taking off and leaving all of us behind. I believe that if you have not yet managed to get to one Bitcoin, that is going to become a lot more impossible for you in short order. So you should be going to work. You should be stacking as hard as you possibly can. And there are no excuses, because I will tell you one thing, guys. I am going to tell you, I told you so. I just want all of you to understand that I am not above that. I'm petty like that. Sorry, I'm just petty. I am going to come back and I'm going to tell you, I'm going to say over and over and over again until you get sick of me. Told you. I told you so. I told you. All right, guys. So come on in, guys. Make yourselves comfortable. Grab the beverage of your choice. Got some sparkling water here. Maybe even take something to write, take some notes down with. Whoa. See, guys, every time I sit down, guys, Bitcoin pumps. It does. Every single time. Almost every single time Bitcoin pumps. Oh, Oliver Velez is having a live session. Let's make it interesting here. Let's make it interesting. All right. There you go. Anyway, so guys, what I want to do here, if I can, is I wanted to talk to you about a few things. I sort of like to have a few hundred people logged on before I start delving into the meat of the topic here. So I'd like to do that. And if in the meantime, you can let me know where you're piping in from. I see good evening from Brooklyn, New York. Yeah, Brooklyn's in the house. All right. All right. So let me know where you're from, guys. Good afternoon from New Mexico. All right, Jeremy, New Mexico. Awesome. Beautiful out there. Okay. What I would like to do with you today, if I can, is I want to go over my first investment, my first trade, if you will, long-term trade, or the better word is my first investment. The first investment of my life, people, really taught me very early on many lessons regarding the wealth accumulation game. And this is what I was initially after my entire adult life. I have done nothing but play financial markets. I don't know anything else. I've never done anything else. I've never had another job. I never had another focus. I never had another plan or plan B. I never did anything with my life from the age of 16 years old except study, read about, and play financial markets. And I've been at this game for now 43, going on 44 years, 37 of which, and we're coming on the 38th year in December, 38 years professionally playing the markets, and I can count on two hands how many times, how many days I have missed being involved with the markets over the past 30, almost 38 years. But my first investment I hold very dear because I was fortunate enough to catch something that began to teach me how the wealth accumulation game worked, how best to play it. And I was fortunate in this regard. I did not experience loss initially in this regard. I experienced loss initially in trading, but I never experienced loss from the investment's perspective, playing something out for the long term. And it is this very first play of mine that contained all of the wealth accumulation lessons that I apply to my Bitcoin play today. So I want to share that with you. Now, this play of mine is actually somewhat famous. I've been talking about it since the mid to late 1990s. So many of my traders who've been with me for decades, they know this play intimately. Many of them actually jumped on board and joined this play with me that has gone on for several decades, actually. So this is relatively known. So if you've heard about it before, then you're going to have to sit here, but repetition has a certain value, and listen to it again. But I'll try to pull out some things that perhaps I never spoke about before. All right. So why don't I do that right now? Love your videos. Michael says, love your videos, humor and insight. I appreciate that. Thank you. Those comments really do help, guys. Those comments really do help. All right. New Jersey is in the house. Yes. Welcome, New Jersey. All right, guys. Okay. So look, Canada's in the house too. Ooh, Norway's in the house. Washington is in the house. Washington State is in the house. All right. And so in addition to that, I will touch upon the options theme, which seems to be a really hot topic as well. So those are the two things that I want to do here with you today. Talk about how my first investment really taught me many lessons that I apply to Bitcoin to this very day. And I think you should as well. And I'll touch upon the options being recently approved by the SEC on IBIT, which I think is extraordinarily bullish. It's huge, and will add double fuel to Bitcoin's USD denominated price appreciation. All right, so we'll touch upon those two things today. All right. So without any further ado, let me take you to, if I may, let me see if I can do this. Do I have this right? Let me grab some chart. I'll grab a chart up here, and let's talk about my first play. We're going to go all the way back, guys. We're going to take a ride down. I'm going to take you on a trip down memory's lane a little bit. We're going to go all the way back to March of 1981. Now, in March of 1981, what I decided to do was take all of my savings that I had done on side jobs, shoveling snow with neighbors, cutting grass, doing little odds and ends. And I also had a summer job in the welfare office in my town, actually, during the summers, during a work program. I saved a bit of money together and decided I was going to use this money to make, I'd been studying and reading. I'm going to use this to make my first investment. This is in March of 1981. What I also decided to do was to gather up as many family members who wanted to join me in this effort as possible. And so I did manage to convince some aunts and some uncles and some cousins to sort of join in. And we started what is called what many people would refer to as a family investment club. And I called this investment club WBA Investments, which stood for Wealth Builders of America. We opened an account with Wealth Builders of America at Fidelity, and Fidelity was big on helping investment clubs uh, and get involved with DRIP programs, or what's called dividend reinvestment programs. And so I did our first investment through what's called a DRIP, or dividend reinvestment program. You can look that up if you want to know what that is. Anyway, I managed to rummage up enough capital with my capital and that of some of my family members who put in. We got enough to play a company or a stock that I felt was perfect as our first family investment. Okay, I'm going to show that to you now. This turned out to be nothing other than Eli Lilly. All right, symbol is LLY. Now, what I'm going to do for you, I'm going to make this as big as possible. What I'm going to do for you is I'm going to put an arrow, I'm going to put an arrow where we made our first investment. Let me do that right now for you. I promise you this is going to be really quite fascinating. Okay, March of 1981. So more or less right here in this dip. Boom. Okay. That's more or less where we made the first investment. Now, get ready for this. We made a whopping buy of 12 shares. I'm going to say that again. We made a whopping buy of 12 shares. Now, I can't really remember the exact price. I do know that that first buy represented a couple $100. Maybe the price of the stock was around $12, maybe. I just remember $12 and 12 shares. Okay, something. Don't quote me on the exact price. Eli Lilly has split various times throughout its life after that. So what you're looking at is split adjusted prices. So the split adjusted price that we went in at is around $1.27. But at the time, it was around $12, $13, more or less. So we buy a whopping 12 shares. Now, remember, I'm doing this now with family members. So what we decided to do after the 12 shares, we decided as a group that every month we were going to buy 3 additional shares. So the family members would make deposits into this pool. I was responsible every single month for adding 3 additional shares to the initial 3 shares every single month. So one way to look at this is that every quarter we doubled our shares. All right. So every quarter, another 12 shares, but we would do this 3 shares every single month. And we accumulated Eli Lilly this way. We did this 12 shares every quarter for 20 something years. The same amount, 12 shares for 20 something years. Now, I'm going to tell you, we still have Eli Lilly, although this year was the first year I personally started paring down my share to put into Bitcoin this year. But here's what I want to reveal to you. All right. And this is the real important point. Okay. Listen to me carefully. The initial 12 shares went into Eli Lilly in March of 1981 at a split adjusted price of around $1.27. That original 12 shares. Today, right now, those original 12 shares, which cost on a split adjusted basis pennies, those 12 shares today earned or gained $10,800 some odd dollars, almost $10,900, a little shy of $11,000. All right. Pennies turned into just a little less than $11,000. That's astronomical. Pennies to 11,000 for doing nothing. Pennies in, years later, pennies turn into slightly less than 11,000, 8,000, I mean, 10,880 some odd dollars. Okay. Now, as impressive as that is, and some of you might be yawning at that, but give me a moment. As impressive as that is, remember, this was done through what's called a dividend reinvestment program, which a lot of companies still actually have today, where the company will, which a company that pays dividends will automatically reinvest those dividends. Instead of distributing those dividends to you in the form of income, we chose to have the dividends paid out quarterly by Eli Lilly to just automatically go into more shares. So all the dividends were reinvested from March of 1981 until today. Now, those original 12 shares with all the dividends going back into Eli Lilly, those 12 shares, not the additional 12 we did every quarter, the original 12 shares are worth $1.2 million. 12 shares that cost pennies in 1981 are today worth $1.2 million. The actual investment, the one time in, moved from pennies to just under $11,000. But it's the quarterly dividends that kept going in that mushroomed that original 12 share investment to $1.2 million. Now, that's just the first 12 shares. We did 12 shares every quarter for 20 years. Do the math. It's tens of millions of dollars for pennies. Do you understand this? For pennies. Now, why do I share this play with you? Because this was just one. We went on to do this with McDonald's the same year. We went on to do this with Home Depot. We went on to do this with Microsoft. We went on to do this with Apple. We went on to do this with Amazon. We went on to do this with Gold, GLD, back in early 2005. We did this with NVIDIA. We did this. There's just a whole list of things we've done the same thing with. Okay. But I wanted to take you to the first one because it's the first one that taught me what to do with all the others. And it's this first one that taught me what to do with Bitcoin. You see, the one in to NVIDIA, it won. It won a little less than 11,000. I mean, it costs us pennies, but it moved to 11,000. That is impressive, but it's not life-changing. You see, the one in and wait was not life-changing. What was life-changing was every quarter, not us buying additional 12 shares every quarter. That's different. I'm leaving that off the table for the moment. What really made the difference was every quarter, a little bit of change in the form of a dividend went in to get more. Every quarter, a little bit more. Every quarter, a little bit more change, a dividend. All right. It's not the end of it's not life-changing at all. You probably we could probably barely buy a dinner with the dividends we received in the beginning. But that small amount every quarter going in to get a little bit more moved what would have just been a $10,800 gain into a $1.2 million gain. So what does this tell you? There's a lot of lessons in this. The life-changing part of wealth is to not stop. Is every quarter we wound up having more Eli Lilly than the last quarter. And we did this for over 2 decades. Do you understand? For over 2 decades. We made sure that there was never a quarter that we did not have more Eli Lilly than the last quarter. And that was the magic elixir. It was the ultimate dollar cost averaging approach. Price did not come into the analysis. The economy, what it was doing, did not was never a factor. Who the president was going to be was never the factor. Whether we were in a bull market or a bear market was never the factor. Do you understand? Nothing mattered except every quarter dividends were reinvested, which meant that those 12 shares were more than 12 shares, more than the original 12 the next quarter, more than that the next quarter, more than that the next quarter. And we did this for 20 years. $1.2 million today is life-changing for a lot of people. And that was had with pennies, making sure that the dividends were reinvested. If you take this lesson and apply this to Bitcoin, what if every single quarter you made sure that no matter who's the president, no matter what the economic situation is, recession, boom, bust, no matter what the narratives are, no matter what the economy, what the economists are saying, whether we're in a bull market, a stagnant market, a bear market, whether we're in an inflation environment, a deflationary environment, whether interest rates are high, whether interest rates are low, it doesn't matter. Every single quarter, you want to be more Bitcoin rich than you were last quarter. What if you did that for 20 years? If Eli Lilly created life-changing money, Bitcoin, which is orders of magnitude more potent, orders of magnitude more powerful, orders of magnitude better in every way, it's not going to just be life-changing for you. It's going to be life-changing for members of your family that haven't even been born yet. We're talking about generational wealth that you can't possibly ever utilize or use in your lifetime. Wealth that would have to be passed down from generation to generation. If Eli Lilly did this, just imagine what Bitcoin can do. A lot of people seem to forget that $1 put into Bitcoin in 2010. Write this down. $1 invested in Bitcoin in 2010 today is over $90 million. Let this sink in, people. $1 in 2010, you do nothing else. $1, hold it. $90 million plus today. I'm not making this up. Go check it out yourself. Now, what if that's life change? That's generational wealth. But what if you did $1 every quarter since 2010? What is that? It's an incalculable amount. Do you understand what I'm saying? This Eli Lilly taught me the wealth game of just making sure you get a good asset and making sure you are richer in that asset every single quarter of your life or every single quarter for an extended period of time. And you ignore everything else. Now, of course, the key caveat there is that you have to make sure that you do this on something that is good. Because if you do this on something that is bad, it's just not going to work. But we know now we can remove all uncertainty as to whether or not we have something good. We have something good. It's Bitcoin. It is irrefutable. It shouldn't be doubted. It has broken every single record in financial history. It has outperformed every single asset the world has ever known. It has beat every single thing humans have ever held dear and respected by orders of magnitude. It's the fastest asset to reach $1 trillion in valuation, the fastest asset to reach $100 million, 100 million users. It is the fastest growing tech in history. It's the soundest money on planet Earth. It's the ninth, it's the ninth most valuable asset in the world and the fastest one to reach position number 9 in the entire world. On its way to being number 2, I believe, next year, and the following cycle being the number 1 most valuable item on planet Earth. It is, we have no doubt that we've got the right thing to do this on. And so what's one of the key lessons to make sure that you are richer in that asset's terms, not richer in dollar terms, richer in the assets terms? There were quarters where we got more Lilly, but we were down dollar-wise in valuation from the last quarter. But from an Eli Lilly number of shares point of view, our shares never went down. So we were richer every single quarter in Eli Lilly terms. And if we apply that lesson to Bitcoin, making sure that you have more sats, more Satoshis in your wallet every quarter, forever at this particular point, not only will your life be miraculously changed, the lives of your bloodline will be blessed for generation after generation after generation. So that's takeaway 1. Be more Bitcoin rich every single quarter of your life. I don't care if it's $10 more, $50 more, $100 more, doesn't matter. Remember, $1 doing nothing in 2010 turned into 90 million. What if it was $1 a quarter? We want to add that quarterly effect to it. Okay? Now, what's the other lesson? Okay? What is the other lesson that my Eli Lilly trade taught me? Don't sell. We never sold. I'm selling this year, Eli Lilly. Think about that. From 1981, I'm now selling. I'm paring down. So when you have a good thing, wealthy people don't sell people. I'm telling you, the sellers are, it comes from more of a poverty mindset. When's the last time the Mona Lisa was sold? Do you understand? It's a rare event to have something precious and a wealthy person sells it. It's very rare. I'm not saying it doesn't exist, but it's rare. You sell what is inferior. You do not sell what is superior. And so it taught me the power of not selling, but growing every quarter the asset. Okay? Had we sold, we would have never even been close to the tens and tens of millions of dollars that just this one play delivered. It changed many of my family members' lives forever. Okay? All right. That's lesson 2. No selling. Now, trading is a different thing. I'm a specialist in trading, but we're not talking about trading. We're talking about accumulating wealth. It's a completely different game. There's income producing through trading, and there's wealth accumulation. People often ask me, Oliver, what should I be? Should I focus on wealth or should I focus on income? Dude, you've got to master both. All right? Income alone doesn't cut it. And wealth alone doesn't cut it either, really, because you do need income to fill in the long gaps where wealth is not paying you. So, for instance, if you were to look at this, look at the middle of Eli Lilly's life here. We're talking from, the beginning of 2000, more or less, all the way to 2011. You're talking 11 years of continuing to accumulate Eli Lilly, but the price not delivering, but still becoming more rich in Eli Lilly terms. So you need an income approach to survive these periods where wealth needs time to consolidate and rest for the next leg to the upside. All right. So I never am one of these people that say, no, just focus on income. No, just focus on wealth. You don't need income. You need them both. Okay. So anyway, so what are the two lessons? What are the two lessons we covered so far? Number one, make sure you are more asset rich in that asset every single quarter of your life. Number two, selling. Throw that concept out of the window. Now, I will also share this with you. In 2002, I believe it was 2 or 3. Anyway, the beginning of the 2000s, I took this portfolio. Now, we started with Eli Lilly, but it had grown to many other things. I told you, Home Depot and Microsoft and Apple and McDonald's and a whole host of other things, Procter and Gamble and a variety of other things. And I took this portfolio, which was rather massive at the time, to a Wall Street firm, their wealth division. We ACAT'd all, so they were originally in Fidelity. We ACAT'd all of the positions over to this firm on Wall Street. I won't dox them with the name, but we opened up an account at this wealth division. What this firm did, once all the positions were ACAT'd over, ACAT is a form of transferring positions you don't want to sell. You want to sell and move the money. You want to sell the actual shares. You want to transfer the actual shares without selling and triggering tax consequences, right? So we ACAT'd everything over to this firm, and the firm literally gave me a blank checkbook. And the blank checkbook gave me the ability to write any amount I wanted for any reason, up to 85% of the portfolio. So let's say, for instance, the portfolio at that time was $10 million. I had $8.5 million that I could just write a check up to $8.5 million using that portfolio as collateral. And so what did we do with this 85% check thing? We began living tax-free. So the portfolio kept rising in value. But if anyone needed anything, we would draw from that blank checkbook. Oh, this member needs a house. We draw from it. This member wants to open up a business. We draw from it without ever needing to sell. And so this is another wealth lesson. The wealthy don't incur tax penalty. They would much rather borrow against a rising asset to not only not incur a tax consequence, but to potentially incur a tax write-off. It is the poverty mindset that's always thinking about selling. It is the wealth mindset that's always thinking about borrowing. It's a very big difference. Again, Eli Lilly started this lesson for me. How does this fit with Bitcoin? All the stars and the planets are aligning for virtually every single financial institution on planet Earth that is worth their salt will custody Bitcoin, will be allowed to custody Bitcoin. We've heard the recent news regarding the biggest custodian in the entire world, which is BNY Mellon, New York City based huge custodian that has, I believe, over $48 trillion, guys. There's nothing close. $48 trillion in custodied assets. Every single financial institution in short order is going to be rolling out red carpets to Bitcoiners, begging, biting, scratching, fighting for you to bring your wealth or portion of your wealth there, and they're going to open up checkbooks to you. You will be able to get anything on planet Earth your little heart desires if you're a Bitcoiner. This is coming, guys. It's not a pipe dream. It's being developed right now. And by the end of next year, I believe all of this is in place. It's wild. It did it with stocks. And everything is all the I's are being dotted and all the T's are being crossed for the same thing I did with my wealth portfolio is going to be made available to every single Bitcoiner. Whether you think that's good or want to do that, that's a personal choice. I'm just telling you what's coming and what's going to be available. You will never have to sell, ever, if you don't want to. And there will come a point, in my opinion, where it'll be so dumb to sell that if you do, you'll never get that Bitcoin back, ever. Now, what do you sell the most valuable thing on planet Earth for? The 17th most valuable thing? Does that even make sense? Oh, I'd like to sell the number 1 for number 5. Does that even make sense? You don't sell number 1 for a lower number. You borrow against number 1 if you want that lower number. You don't sell the Mona Lisa to put gas in your car. That's stupid, right? Bitcoin's the Mona Lisa of the financial world. Everything else is like gas in your car. You don't sell that to get gas in your car. You borrow some change to get that, against it to get that. And the rising value will make that the cost of that loan virtually non-existent over time. You understand? Okay. So that's the third lesson. Borrow, don't sell. So the third lesson was no, second lesson was no selling. Third lesson was borrow. These are my wealth lessons. Okay. And then came income. So I've already got this asset that is growing in wealth. We're adding every single quarter to it through dividend reinvestments and buying an additional 12 every single quarter. It's mushrooming in value. So the loan to value amounts, if there were any, kept just going down and down and down and down. And then we started to apply an income strategy to the wealth play through options. Options gave us the ability to add a constant flow of income stream to ourselves. And that income went to buy more Eli Lilly. And we did it through various option strategies, not only on Eli Lilly, but the entire portfolio. And there are many, you can add an income source over and beyond the income that your particular underlying asset can provide for you. Bitcoin doesn't really have an income component to it. It's not a company. It doesn't throw off dividends. But through options, you can add an income generating engine to the spot Bitcoin asset itself. And that income approach added to everything I just explained to you took the explosion of wealth in that asset to even higher heights. And so this one play, it was kind of many plays, but because this one kicked everything off, I give a lot of the credit to Eli Lilly, my Eli Lilly play. It taught me the real true wealth accumulation game. It took me out of this poor poverty mindset that I want to give my wealth away to someone. That's selling. When you sell it, you're giving it away to someone. I mean, it's not a gift, of course, but you're getting something that no wealthy person wants. No wealthy person wants your dollars. Do you understand this? That is a poor man's mentality. I want dollars for this valuable thing. That is a poor man's mentality. A wealthy person doesn't want dollars. Why does a wealthy person doesn't want dollars? Well, I've shown you this many times. Why does a wealthy person not want dollars? Because this is what you get. Check this out. This is what you're getting when you sell extraordinarily valuable things. You are getting this. That's dollars, people, right there. Do you see it? Now that's to 2020. This chart is really down here. Let me erase this. This chart is really down here now. Do you understand? So why would you sell something valuable here to get this? Wealthy people don't do that. They don't. They're looking to move this to that, something valuable that statistically rises over time, not dollars, which statistically melt virtually every single second you hold them by anywhere between 7, 9, and 12%, 15% a year. And that's if you've got a good one, like the US dollar. If you got a bad one, your fiat currency is melting by 120% a year. It's crazy. And so Eli Lilly taught me all of these things. It taught me how to apply these principles to Bitcoin. So, what are those principles once again? Your focus should be, give me a second here. Your focus should be to be asset rich in that asset, richer every single quarter forever. Why would you stop that? Why stop and say, oh no, Oliver, I'm going to stop. I don't want any more wealth. I'm finished. I'm done. I've finished. No more. I don't want to be wealthier every quarter anymore. I want to stop this. I'm tired. Oliver, I'm tired. I'm tired of being wealthy, Oliver. I don't want to be wealthier anymore. No, why stop that? Put those melting ice cubes that you just saw. Put this bullshit that you are forced to work for. Guys, you're forced to work for this bullshit right here. Look at this. Look at the bullshit you're forced to work for. Where is this thing? You're forced to work for this. You have no choice. You got to work for that. But as soon as you get that, you need to flip that to BTC, because hold it long enough and you'll be down here. So you have no choice. You've got to work for this, but you can now flip it. We now have something to flip it into. All right. And so you should never want to stop that. You should never want to stop becoming more Bitcoin rich every single quarter of your life. And the way I encourage my guys to look at this, the way I encourage them to look at this, guys, is I encourage them to look at it like this. Every new little tranche of Bitcoin you get, look at that separate and think of what that little tranche will be in 4 years from now, 8 years from now, 12 years from now. It's mathematically guaranteed to lift your life every 4 years forever. Just this little tranche you did this quarter. And then the next quarter, that tranche is a separate life changer. That little extra tranche the following quarter, that all by itself is going to change your life every 4 years forever. And then the next quarter, that little tranche, every 4 years, it is going to work for you. It is going to work lifting you, your family, your status, everything that you are, it is going to affect your future forever, even beyond your death if you pass it on. But if you sell it, it's going to start doing that for someone else. But Oliver, I don't want any more money. I don't want any more wealths. All right. So, once again, what were these lessons? Become more, applied to Bitcoin, become more Bitcoin rich every quarter. I don't care if it's by a few dollars, it doesn't matter as long as it's more than last quarter. Number 2, don't sell. Number 3, borrow. It's coming, guys. You're going to be able to do this, every one of you. All right. Number 4, which is the most sophisticated part of this, is if you want, you can add an income generating machine to it through options. And that's going to be the next topic I get into. I'm not going to teach you how to do this. That's over and beyond the scope of our general talk here in the public. But I do want to talk very briefly about why options are huge for Bitcoin. And I know there's this growing voice amongst the bozos out there who are really working hard for you to think that options and derivatives on an asset are negative. This is bullshit. This is from people who are very unsophisticated about how markets function. They have theories from other third-party bozos that they have just somehow accepted as being true. But listen to me carefully. There is not a single thing that you can point to that options and derivatives haven't helped explode upward. Every single time you put options on something, it explodes upward. Every single time you give people the ability to do things via the derivatives market based on an underlying asset, it explodes the asset. Why does it explode the asset? Because it forces and it encourages and forces more use of the asset, which is more adoption of the asset, which means there's more demand for the asset. There's more eyeballs on the asset. There's more interest in the asset. And that always leads to more value in the asset. The higher the interest, the more value. The more the use, the more valuable. The more the eyeballs, the more valuable. All of these things make the underlying more valuable. People that would never be interested in Bitcoin for many, many years to come are now interested in Bitcoin because options are on it. Think about that. That's instantaneous use, adoption, learning about it, playing it, using it as the underlying to your derivatives and options game. And a lot of people just simply, options are very sophisticated. They simply don't understand that really it's sort of like fuel. It's like adding 2 rockets to the back of something. It was already fast. Now add 2 jet fuel rockets to the back of it. Turbocharge that thing. Options turbocharge that thing. You got to say it like that. You can't be like, yes, options turbocharge it, Oliver. Yes. Yes, Oliver, options turbocharge it. Yes. That's what Oliver said. It turbocharges it. No, it turbocharges that thing. You got to say it like that. Options turbocharge that thing. I know I'm silly, guys. I know. Turbocharge it. All right. So options turbocharge an asset, right? So let me give you some examples of that. I'll show you some quick examples of that if you don't mind. All right. If you mind, all right. I won't, but I'll show you some examples of that. And I think I did this before. Guys, NVIDIA is one of the best performing assets on earth outside of Bitcoin, but it is up there now. Okay. But not close to Bitcoin, but still It's like number 2, number 3, whatever, depending upon the time frame that you pick, right? But check this out. I want to show you something here. You see, NVIDIA went public in 1999. Okay. Their options got approved in the same year, 1999. So they went IPO in 1999 and they got options in the same year. Now, some people would have you believe that, oh, well, options just that's just actually that's creating paper, NVIDIA. It's gonna hold the stock back. This is retarded. I don't want to get banned for that word, but this is regarded. That's bozo language. Do you understand? It turbocharged that thing. I mean, options gave extra life to NVIDIA. And NVIDIA went on, after options were approved, to become one of the best performing stocks ever in the history of stocks. Okay. Here is, whoa, almost 64, guys. Whoa, okay. I'll take that thing. Okay. Oh, wait, no, options are holding it back. It's not supposed to be at 64, Oliver. Options are holding it back. So let's go to gold, the gold the gold ETF. Let me just do this real fast here, guys. GLD. We went into GLD big on January 2005, guys. So options were approved. I did this. I posted this on my X account. So options here's where the ETF, the first US based, there were spot gold ETFs in other countries. Sound familiar? This is when the US finally approved its first spot gold ETF. It was the latter, it was in 2004. It was actually the latter part of 2004. We went in on the beginning of 2005 and we enjoyed this ride. All right. Believe it or not, I did not sell until here. Okay. And I put all of this into BTC. All right. But okay. Anyway, my point is here that options, the ETF, this first spot gold ETF was started here. What you're looking at is every bar is 6 months. It took years. It took 4 years, almost 4 years. It took 3 years and change for options to get approved on gold. And did it stop anything? No, it didn't stop anything. In fact, it gave it extra life, because if you were to track volume, you would see volume after options explode. Volume exploded for gold after options got approved. More use, more demand, more activity, more value. Okay. And of course, we see gold is trading at all-time new highs. Oh, wait, but Oliver, how can it be trading at all-time new highs? I thought options are supposed to create paper and it's supposed to stop it. It's trading at all-time new highs. What has it stopped? Nothing. All right. Options ignite. They don't halt. I'm going to repeat that. Options ignite an asset. It's rocket fuel for an asset. It doesn't halt. Do you understand? It's rocket fuel. It ignites an asset. It doesn't halt. Now, for some reason, this idea is just, this silly idea is still very prevalent in the industry, that they're trying to hold the price back. I am so sick of this stupid narrative. Do you think the elites want this? Let me show you something. You think the elites really want, let me show you this. You think they what the heck is going on here? You think they really want you think they really want the now that they're in, now that they're in, now that the elites are in, you really think they want to make it easier for you to get it? Like, think about this, people. It's the best performing asset in the history of the world. It's the scarcest asset on planet Earth. It's the hardest money human beings have ever come in contact with. It's being adopted faster than you can say boo all over the world. The hash rate is going through the roof. Small nation states, regulatory clarity, institutional adoption, pension funds are starting to put it on the balance sheet. Corporate America is now starting to put it on the balance sheet, especially after FASB rule changes. Presidential candidates are talking about a pro-Bitcoin stand. Now, do you think they want this to be accessible to you? More accessible. Let's bring it down to 3,000 to make the little guy have a chance. You really think you think that's the game, to make this easier for you to get or to make it harder for you to get? Do you think that the attack is to bring it to you or to take it away from you? I think the attack is to take it away from you. I think the attack is to outprice you bozos. When you want something truly exclusive, do you lower the price to make it exclusive? Or do you raise the price to make it exclusive? If you don't want the riffraff in your neighborhood, what do you do with the value of the properties? Lower them? Or if you want true exclusivity, do you raise the price of the property? There is an attack on Bitcoin, but it's up. It's not down. They're not going to let this come to you. They're going to take it away from you. This is why your window of opportunity is small. This is why you got to stack harder. And you guys listening to these nitwits out there, these keyboard warriors that know absolutely nothing about financial markets, try to tell you they're holding the price back. In what world? It's the best performing asset in the world. What are they holding it back from declining, right? Bitcoin hasn't been able to decline, people. They're holding it back from declining. Every single bull market in the past, Bitcoin has had what, 40% declines, 38% declines, 30% declines. When's the last time you've seen a 40% decline I'm talking about during the bull run. During every single bull run in Bitcoin's history, you have multiple 40% declines. Have we had a 40% decline? No. This is the best halving period of Bitcoin's life, the very best one. It has the shallowest pullbacks of any bull run in Bitcoin's history. And oh, the attack is on. They're holding the price back. They're not holding the price back. If anything, they're holding it back from coming to you bozos, you cheap bozos who are waiting at $3,000 still, or $12,000 Bitcoin, right? They're not going to let this come back to you anymore. I'm sorry. This is, people, becoming the ultimate Veblen good. Do you know what a Veblen good means? Go look it up, Einsteins. Bitcoin is becoming the ultimate Veblen good, that good that gives you status for having it. All of you are already experiencing the Veblen effect because you feel proud of the amount of Bitcoin you have. And some of you even go around asking the silly question, how many Bitcoin do you have? And there's a pride in that. Some of you even share how many. I've got 6 Bitcoin. That's Veblen. That's that Veblen effect. You feel proud, like Louis Vuitton luggage back in the early 1900s. If you had Louis Vuitton luggage in the early 1900s and you set those bad boys down before boarding a ship, hopefully it wasn't the Titanic, but you boarding a ship and dropped your Louis Vuitton luggage in the mid to late 1800s to cross the Atlantic, man, that was like, whoa, it's got Louis Vuitton luggage, Veblen good. Well, Bitcoin is becoming the ultimate Veblen good, where your status in society, in the world, will largely be dictated by your Bitcoin. You know, back in the day, there was this saying, my word is my bond, right? My word is my value. That is my promise. That is my everything, my word. Well, now it's really true, isn't it? Because your 12 to 24 words is your Bitcoin. Your 12 to 24 word seed phrase is your bond, is your life, is your value. For the first time, that's freaking true. My word is my bond. Wow. Powerful. That's crazy, right? That is powerful, people. And no one can take your words from you. No one can take your word. Try, no one can ban words. No one can take words away. Let somebody say, well, I create this edict that thou from this day forth in my country, no one will ever be allowed to use the letter B because it stands for Bitcoin and we hate Bitcoin. So the letter B is outlawed. Yeah, good luck with that. Good luck with banning letters. Good luck with banning numbers. You can't use the number 0 anymore. It's banned. Good luck with that. Good luck with banning language. Bitcoin is all of that. Bitcoin's maths. Bitcoin is words. Bitcoin's letters. Bitcoin's numerals. You can't take these. You can't stop these. You can't ban numbers and letters. You can't. And so for the first time, our word really is our bond. Or the modern language is my word is my Bitcoin. Wow, crazy. Isn't that crazy, people? All right. That's right. The old cycles, you would have Bitcoin dropping back in the 30s with ease. Not now. Not now. So this idea, guys, that the BlackRocks of the world and the Larry Finks of the world want to crash Bitcoin. My God. Oh yeah, we want to put our wealthiest clients in this so that we can make them less wealthy and collect less fees. Where? Just where does this lack of intelligence come from? Like, it's truly stupefying to me. It truly is. It is stupefying. The level of dumb. It reminds me of what my dad used to always say. You just can't fix it, Oliver. You can't fix stupid. That no amount of reason can fix stupid. If stupid is what stupid does. Stupid is what stupid does. Right? It's just you can't fix it. You can't fix the lack of intelligence. You know, it's a disease that just can't be fixed. All right. So please talk about the gamma squeeze. All right, it's a very technical talk, but I'll try to do it in broad strokes. Guys, look, I have witnessed markets go limit up in the futures market, right? I don't know if many of you are familiar with what limit up is. So every market is man-made except the Bitcoin market. I want that to sink in for you. Every market is a man-made created market that is controlled by a small group of human beings. They make the rules of the market. They set the price of the market, at least initially. They can influence and manipulate the market price. They set the rules when the market starts and is available for trading, when it's not, what the holidays are, what hours it's closed down. All of this is not a free market. It is a man-made market. The only free market in the world today that no man runs or controls is Bitcoin. Right? Bitcoin doesn't have holidays. It doesn't have days off. It doesn't stop to get maintenance. Oh, we're down because of maintenance. None of that. All right. It's the only real free market in the world. Now, that's going to become very important in just a couple minutes here. It's the only free market. I have lived in my professional trading career, I've lived through a variety of what's called limit up markets in the futures market. And what a limit up market is they create these thresholds, these ceilings, where if the asset moves up too fast to one of these ceilings, they stop the market from operating. No one can get in, no one can get out. And so there are these limits that if you trigger a limit, all activity is stopped. The exchange, the whole market, man-made controlled, is shut down, and you can't try to get out of your position or to get into a position in that market until the next morning. That's a limit up market. It hits the limit, that's it. If you were short and it shoots up to the limit and you're losing millions, there's nothing you can do. You can't get out. It's at the limit, market stopped. That's a limit up market. The following morning, you're sweating bullets. You were short. Now you're hoping that when the market opens this morning, right, you can eliminate your short position. But what if the next morning it opens up at the limit without a single trade? So now the next morning, boom, it opens at the next limit without a single trade. Now you have to wait the next day and you're down millions more. You're waiting the next day. You're losing 10 million a day. All right. The next day, you're hoping it trades, but it opens at the limit the third day. Now you lost another 10 million. And the fourth day, I've lived through a limit up market for 2.5 weeks. 2.5 weeks, not a single trade. The market just open at the limit, open at the limit, open at the limit, open at the limit. No one can get out of their shorts. No one can even enter to try to ride it to the long side. Locked out the world because men created a false ceiling for the market. Now, the equity market has these limits that are triggered that stop the market for trading for every 15 minutes. This is a man-controlled market. Well, these are similar to what is commonly referred to in the options field as gamma squeezes. Think of a gamma squeeze as like, I am hedging volatility, but it's now running to I'm hedging with a skewed short position. My gamma hedge is running away from me. In order to keep this in check, I have to buy the underlying asset. But Bitcoin is the underlying asset, and it's running, it's jumping $50,000 at a time, $80,000 at a time, $150,000 single bars at a time. And I have to chase it. Why? Because there's no limit up. There's no trigger to stop it. Now, listen to me. Every market has what I'm going to just label it, limit up gamma squeezes. Every single market that has ever existed in the entire world always has these runs. So man has tried to artificially cap them. Well, you can't artificially cap Bitcoin. So let me just tell you this. When one of these limit up scenarios comes to Bitcoin, and every market receives them, there's not a single one that hasn't. Everyone, and not just one, many of them. This is the first time man can't stop it. Follow what I'm saying? There's no circuit breaker on Bitcoin. There's no wait, halt. There's no wait a minute. Print more shares. Remember what they did with GME, GameStop? They printed more shares, more supply to stop it from running. They created more supply. You can't create more supply of Bitcoin. There are no games available in the Bitcoin space that have typically saved firms like JP Morgan when nickel was going limit up every single day for weeks. Do you know what JP Morgan got done? They were about to go under. Do you understand that JP Morgan was one of the biggest short holders of nickel in the world, along with some, I think it was a Hong Kong investor? They got in bed with this Hong Kong investor. It could be Korea. I can't remember. But JP Morgan wound up becoming the biggest short holder in the world of nickel. And nickel started going limit up. Boom, limit up. They were losing tens of millions of dollars every day. Boom, limit up. Boom, limit up. They couldn't get out. So what did they do? Someone made a call. And guess what happened to the nickel market? Because if it kept going, they were going under. They closed it for 2 months. What? Maybe it wasn't quite 2 months. It was weeks. They literally just closed the market. Nobody can trade. Knowing that as the interest waned, the price would drop and save them. They artificially made the nickel market no more. No one can trade it anymore. These are the games you cannot play with Bitcoin. You can't F with my Bitcoin in cold storage. JP Morgan can't F with your Bitcoin in cold storage, nor anyone's Bitcoin in cold storage. They don't have control over the time that the market trades. It's 24/7, 365. They have no control over the supply. They have no control over the issuance. They can't use holidays as an excuse to cool the market down. They can't put circuit breakers or limit up caps on the market. And when Bitcoin has that gamma squeeze run, you are going to see single Bitcoin bars go $200,000, $300,000, $400,000 at a time, because it would have happened in these markets if they didn't have artificial caps. And these are not limited asset markets. So think of, you're bringing double the fuel with options to an asset that you don't control. You're pouring gasoline, and Bitcoin's volatility is skewed to the upside. So options is a vehicle to play that volatility. And you get a gamma squeeze type scenario like GameStop, and this thing starts running. There is nothing in the entire galaxy, nor any other galaxy that we've discovered outside of our own, that can halt it, stop it, cap it, or limit it. And it's a possible scenario. You could go to bed one night and wake up, Bitcoin's at 120 when you went to bed, and it's at 780. Just during the time you went to bed. Guys, I have seen this happen with markets that are man-made, man-controlled. Imagine one that's not. Oh my goodness. It's going to get really interesting. It's just going to get really interesting, guys. And I freaking love it, man. I love it. All right. That's right. 7% circuit breaker, 13% circuit breaker, and then 20% circuit breaker is the final one in the day's finished. So these are man-controlled mechanisms. Bitcoin is not man-controlled. Wow. It's crazy. So when you hear things like from Samson Mao, the mega Bitcoin candle, $100,000 candle. Oh, that's coming. Oh, that now that's not only a given, you got to up. Those are rookie numbers, buddy. You got to up those numbers. Those are rookie numbers, man. You got to pump those numbers up. $100,000 candle with no circuit breakers, no limit up, and you're just adding rocket fuel? No. 100,000 is just too small. The mega candle is going to be way bigger than that when you have these squeezes. And remember, guys, no market is exempt from them. Every single market in the world has had them, many of them. And if they weren't a problem, men wouldn't be trying to control them, would they? Men of power wouldn't be trying to control them. So now you got a market that these men of power can't control. And you're going to see what happens. Bitcoin could potentially be that asset that takes down venerable 100+ year firms if they get stupid enough. It's crazy. I smash bought Bitcoin right now on the like button. Awesome. I appreciate that, rock and roll. I appreciate that. All right. Feel good to see my mentor here again. Feel very fortunate to be here, Mount Dora, Florida. Well, thank you very much, Craig. Thank you very much. All right, guys. So, guys, listen, don't let these bozos out here make you think like, oh, well, options are going to, this paper Bitcoin, it's going to squash the price. What have options squashed in the entire history of financial markets? What have they squashed? Nothing. They've added fuel to the upside. And so don't let them fool you with this. The other thing, don't let them fool you about that BlackRocks are trying to suppress the price. This is just retarded. This is regarded. They're trying to take this away from you. They want to take spot Bitcoin price so high that your only choice will be to go to their ETF, which they'll always make sure is a single or double-digit number. Oh, Bitcoin is at 850,000, but buy my ETF, it's $14. And they're going to F with your mind with the unit price. They want that unit price up there so you opt for the ETF and not the real thing. You opt for the carbon copy of the Mona Lisa for $2.50. You got the real Mona Lisa right in the Louvre. And then down the street is a shop that will sell you a carbon copy of the Mona Lisa for like €5. And that shop wants you to buy the fake one because they're saying you can't buy the real one. You might as well get a fake one. That's what BlackRock wants. BlackRock wants $1 million, $2 million, $4 million Bitcoin so that all of you never think about the real thing and come to them for the carbon copy thing. Well, my ETF's $14. My ETF's $38. My ETF's $40. That's $800,000. That's $4 million. You can still have that. Just buy my $40 representation of that. That's the game they want. They don't want you thinking about the real thing. They don't want you thinking about spot. They want you coming to them. They want to be the gateway to Bitcoin. So how do you do that? Let's get this thing to $4 million so everyone forgets about buying $4 million item and buy our $40 ETF. That's the game, guys. They're not going to crash this to you. Trust me, you're not that special. Let's give them a chance. Let's give them a chance to get more of this. Dude, don't let these people fool you with this silliness. It's ridiculous. All right, guys. All right, guys. I hope this has proven helpful. I hope at least you understand, whether you agree with me or not, you understand at least where I'm coming from. And guys, I'm telling you, I don't want this to come off wrong, but I'm right. I said it. I'm right. You're going to see. And I'm going to come back and I'm going to tell you I told you so. Why? Because I'm petty like that. Yes, sir. I am petty. I'll do it. I will say I told you so until you get sick of me, until you block me, because I'm petty like that. All right, guys. Ciao for now. Boom. Boom. All right. Go to work, stack harder. Ciao.